The floor of the New York Stock Exchange was a sea of flashing screens and frantic hand gestures. Traders were in a state of panic, their faces etched with worry as they tried to make sense of the chaos unfolding around them. The air was thick with tension, and the noise was deafening, a cacophony of shouts and electronic beeps. Traders, eyes glued to monitors displaying plummeting graphs, barked orders into phones. The numbers on the screens were a blur of red, indicating massive losses. Every second counted, and the pressure was immense. Some traders were on the verge of tears, while others clenched their fists in frustration. The atmosphere was electric, charged with a sense of impending doom. News channels blared headlines like "U.S. policy rocks global markets" and "Tech giants in freefall." Analysts and experts were brought in to dissect the situation, their faces grave as they discussed the potential ramifications. The news anchors struggled to keep up with the rapidly changing developments, their voices tinged with urgency. From Tokyo to London, a wave of uncertainty swept the financial world. Markets across the globe were in turmoil, with investors scrambling to protect their assets. The ripple effects were felt far and wide, as the interconnected nature of the global economy meant that no market was immune. The sense of unease was palpable, and the future seemed more uncertain than ever. America had sneezed, and the world was catching a cold. The impact of the U.S. policy announcement was being felt in every corner of the globe. Investors were pulling out of risky assets, and safe havens like gold and government bonds were seeing a surge in demand. The financial markets were in a state of flux, and the uncertainty was causing widespread panic. It all started with a policy announcement, but not just any policy. This was a game changer, a bold move that had the potential to reshape the global economic landscape. The announcement had come out of the blue, catching everyone off guard. The details were still being analyzed, but the initial reaction was one of shock and disbelief. This one, unveiled by the White House just 48 hours earlier, had sent shockwaves through the global economy. The policy was aimed at curbing the influence of tech behemoths and turbocharging the transition to green energy. It was a bold, some would say reckless, gamble by the U.S. government. The implications were far-reaching, and the markets were reacting with unprecedented volatility. Aimed at curbing the influence of tech behemoths and turbocharging the transition to green energy, it was a bold, some would say reckless gamble by the U.S. government. The policy was designed to break up monopolies and promote competition, but the immediate effect was one of chaos. Tech stocks were plummeting and investors were fleeing in droves. The long-term benefits were still up for debate, but the short-term impact was clear. The global markets were in meltdown. The new policy was a two-pronged spear aimed straight at the heart of the American economy. It was designed to shake the very foundations of two of the most influential sectors, technology and energy. The implications were vast, and the ripple effects were felt almost immediately across the financial landscape. The first blow targeted the tech industry, already reeling from months of antitrust scrutiny. Major players like Google, Apple, and Facebook found themselves under the microscope, with their every move being analyzed and critiqued. The new regulations were not just a minor inconvenience, they were a game changer. Stringent data privacy regulations, coupled with increased scrutiny of mergers and acquisitions, sent shivers down Silicon Valley's spine. Companies had to rethink their strategies, focusing more on compliance than innovation. The cost of doing business skyrocketed, and the once unstoppable tech giants found themselves navigating a maze of legal and regulatory challenges. The message was clear: the era of unbridled tech dominance was over. Protests erupted, with employees and activists demanding more accountability and ethical practices. The tech industry, which had long been seen as the epitome of progress and innovation, was now grappling with an identity crisis. The second prong targeted the energy sector, with massive subsidies for renewable energy projects and hefty penalties for fossil fuel companies. This was a bold move, signaling a significant shift in national priorities. The government was making it clear that the future lay in sustainable energy, and the days of fossil fuel dominance were numbered. This move, while lauded by environmentalists, sent oil and gas stocks tumbling. The traditional energy sector, which had been a cornerstone of the American economy for decades, was now facing an uncertain future. Companies were forced to adapt or perish, investing heavily in green technologies or risk becoming obsolete. The U.S., it seemed, was betting big on a green future, and Wall Street wasn't sure what to make of it. Financial analysts were divided, with some seeing it as a necessary evolution, while others feared the economic repercussions. The stock market was volatile, reflecting the uncertainty and the high stakes of this policy shift. The policy earthquake had indeed shaken the nation, and its aftershocks would be felt for years to come. Across the Atlantic, European markets reeled from the aftershocks. The tech-heavy DAX in Germany plunged, mirroring the Nasdaq's freefall. European tech giants, heavily reliant on the US market, braced for impact. Automobile manufacturers, already grappling with the shift to electric vehicles, faced further uncertainty. But it wasn't all doom and gloom. Renewable energy companies, buoyed by the US's green push, saw their stock prices soar. European nations, already ahead of the curve in renewable energy adoption, sensed an opportunity. Could this be Europe's moment to take the lead in the global green tech revolution? In Asia, the reaction was more measured, at least on the surface. The Nikkei in Tokyo dipped but quickly recovered some ground. Chinese markets remained relatively stable, with analysts attributing the muted response to the government's tight control over capital flows. But beneath the veneer of calm, a storm was brewing. Chinese tech giants, already engaged in a fierce rivalry with their American counterparts, saw an opportunity to capitalize on the US policy shakeup. Plans were drawn up, alliances forged, all under the watchful eye of Beijing. The dragon, it seemed, was merely biding its time. Section 5. Emerging markets, a mixed bag. Emerging markets have always been a complex and dynamic segment of the global economy. They are characterized by rapid growth and industrialization, but also by volatility and unpredictability. This section delves into the recent developments and challenges faced by these markets. For emerging markets, the US policy announcement was a double-edged sword. The policy changes sent ripples through the global financial system, affecting economies far and wide. Investors and policymakers in emerging markets had to quickly adapt to the new reality. On the one hand, the uncertainty in global markets threatened to trigger capital flight, weakening their currencies and pushing up borrowing costs. This was a significant concern for countries already grappling with high levels of debt and inflation. The fear of economic instability loomed large, causing anxiety among investors and governments alike. On the other hand, the US's retreat from fossil fuels presented an opportunity for countries rich in renewable energy resources. This shift in policy created a favorable environment for investments in green energy projects. Emerging markets with abundant solar, wind, and hydroelectric potential found themselves in a unique position to attract new investments. India, with its ambitious solar energy targets, saw a surge in investment from foreign firms looking to capitalize on the global shift. The country's commitment to expanding its renewable energy capacity made it an attractive destination for investors. Solar panel factories and renewable energy projects began to flourish, creating jobs and boosting the economy. Latin American nations endowed with vast hydroelectric potential hope to attract similar interest. Countries like Brazil and Chile, with their extensive river systems, saw an opportunity to harness their natural resources for sustainable energy production. The influx of foreign capital could help these nations develop their infrastructure and reduce their reliance on fossil fuels. The U.S. policy shift, while disruptive, had inadvertently opened up new avenues for growth and development. Emerging markets, despite the challenges, found ways to adapt and thrive. The focus on renewable energy not only promised economic benefits but also aligned with global efforts to combat climate change. This mixed bag of outcomes highlighted the resilience and potential of emerging markets in navigating the complexities of the global economy. Section 6. Backlash on home ground. Back in the US, the domestic fallout from the policy announcement was immediate and far-reaching. Tech companies, facing a barrage of new regulations, threatened to shift operations overseas. Energy companies, fearing for their bottom lines, lobbied furiously for a rollback of the green energy mandates. The political divide, already deep, widened further. Supporters of the policy hailed it as a bold move to rein in big tech and combat climate change. Opponents decried it as government overreach that would stifle innovation and cost jobs. The battle lines were drawn, and the fight had just begun. Section 7. The dollar's uncertain future. The policy shakeup also had profound implications for the US dollar's status as the world's reserve currency. The greenback, already under pressure from rising inflation and geopolitical tensions, faced renewed scrutiny. Foreign investors, spooked by the US's unpredictable policy moves, began to diversify their holdings, shifting away from dollar-denominated assets. The Chinese yuan, buoyed by China's growing economic might and stable political system, emerged as a potential contender. The euro, despite its own set of challenges, also benefited from the dollar's woes. The era of dollar dominance, it seemed, was drawing to a close. Section 8. A New World Order? The U.S. policy announcement and the global market turmoil it unleashed marked a turning point in the post-Cold War order. The U.S., once the undisputed leader of the global economy, was now seen as a source of instability and uncertainty. Other nations, emboldened by America's retreat, sensed an opportunity to assert themselves on the world stage. From the halls of power in Beijing to the boardrooms of Brussels, a new multipolar world was taking shape. The U.S., while still a formidable power, could no longer dictate the terms of engagement. The rules of the game were being rewritten and the stakes had never been higher. Section 9. The time to pay attention is now. The events of the past few days have shown us that we live in a deeply interconnected and rapidly changing world. Decisions made in Washington have ripple effects that are felt across the globe, shaping the lives of billions and determining the fate of nations. It is more important now than ever before to stay informed, to engage in thoughtful debate, and to demand accountability from our leaders. The future of the global economy, and indeed the planet, may very well depend on it.